Question 1. Understanding policy provisions. Which of the following statements about the contestability period in a term life insurance policy is not correct? A. The contestability period typically lasts for 2 years from the date the policy is issued. B. During the contestability period, the insurer can deny a claim based on misstatements made by the insured. C. The contestability period allows insurers to investigate claims for accuracy and fraud. D. After the contestability period, the insurer has no right to contest a claim regardless of the circumstances. Answer D. After the contestability period, the insurer has no right to contest a claim regardless of the circumstances. Explanation. The contestability period, as defined under Florida's statutes and common practices, generally lasts for 2 years. During this time, insurers retain the right to deny claims based on misrepresentations made in the application. After the contestability period expires, insurers can only contest claims based on specific grounds, such as non-payment of premiums or if the policyholder was not insurable at the time of application, but they cannot contest claims solely based on misstatements. Therefore, option D is incorrect, as there are limited grounds for contestation even after the period has elapsed. Question 2. Scenario-based analysis. Mr. Thompson, a 45-year-old non-smoker, recently purchased a 20-year level term life insurance policy with a face amount of $500,000. After 10 years, he suffered a heart attack and passed away. Upon filing the claim, the insurance company investigated his medical history and found that he had failed to disclose a previous condition related to hypertension. What is most likely to occur in this situation? A. The claim will be paid in full since Mr. Thompson's condition was unrelated to the cause of death. B. The claim may be denied based on the misstatement, depending on whether the condition was disclosed during the contestability period. C. The claim will automatically be paid at half the face amount due to the undisclosed condition. D. The insurer will pay the claim but will terminate Mr. Thompson's policy and not cover future claims for his beneficiaries. Answer. B. The claim may be denied based on the misstatement, depending on whether the condition was disclosed during the contestability period. Explanation. Under the Florida Insurance Code, during the contestability period, typically the first 2 years of a policy, insurers can contest claims based on misstatements. Since Mr. Thompson had a history of hypertension that he failed to disclose, the insurer could investigate this matter. If the heart attack was related to hypertension, the insurer may deny the claim. However, if the claim is made after the contestability period and the condition was not relevant to the death, the insurer would have a more challenging time contesting the claim. Therefore, option B is the most accurate. Question 3. Premium calculation and payment. Which of the following factors does not directly influence the calculation of premiums for term life insurance policies? A. The insured's occupation and lifestyle choices. B. The geographic location of the insured. C. The insurer's administrative costs and profit margin. D. The specific health conditions disclosed by the insured. Answer. C. The insurer's administrative costs and profit margin. Explanation. Premium rates for term life insurance are primarily influenced by the insured's age, gender, health status, occupation, lifestyle choices, and geographic location due to varying risk assessments. While administrative costs and profit margins are important for the overall pricing structure of the insurer, they do not directly affect the individual premium calculation for a policyholder. Thus, option C is correct because it focuses on the operational aspect rather than the individual risk assessment of the insured, making it the least directly influential factor in premium calculation. Question 4. Types of policies. Which of the following best describes a decreasing term life insurance policy? A. A policy that pays a fixed death benefit for the entire term, regardless of when the insured passes away. B. A policy in which the death benefit decreases over the term while the premium remains level. C. A policy that offers the option to convert to a permanent policy without medical underwriting at the end of the term. D. A policy that allows the insured to receive a portion of the death benefit if diagnosed with a terminal illness. Answer. B. A policy in which the death benefit decreases over the term while the premium remains level. Explanation. A decreasing term life insurance policy is structured so that the death benefit decreases over the term of the policy, usually in line with a repayment schedule such as a mortgage. The premiums generally remain level, making this type of policy suitable for covering debts that decrease over time. This contrasts with a level term policy where the death benefit remains constant throughout the policy duration. Options A, C, and D describe characteristics of other policy types or features and are therefore incorrect. Question 5. Claims process. When filing a death claim under a term life insurance policy, which of the following documents is typically NOT required by the insurance company? A. A certified copy of the death certificate. B. The original policy document. C. The beneficiary's birth certificate. D. A claim form completed by the beneficiary. Answer: C. The beneficiary's birth certificate. Explanation: when a beneficiary files a claim, the insurance company typically requires a certified copy of the death certificate, the original policy document, and a completed claim form. A birth certificate for the beneficiary is not generally required unless specific beneficiary relationships or ages need to be verified, making option C the correct answer. The requirements can vary by insurer, but these three documents are standard in most claims processes. Question 6. Ethical considerations. In the context of selling term life insurance, which of the following practices would be considered unethical? A. Providing a client with all available options, including the risks and benefits of each. B. Failing to disclose commission rates and fees associated with a policy. C. Assessing the client's insurance needs through a thorough interview. D. Recommending a policy that aligns with the client's financial goals. Answer: B. Failing to disclose commission rates and fees associated with a policy. Explanation: transparency is a key ethical principle in insurance sales. An agent must disclose all commissions, fees, and any potential conflicts of interest to clients. Failing to do so undermines the client's ability to make informed decisions and can violate consumer protection laws, making option B the unethical practice. Options A, C, and D are aligned with ethical selling practices focused on client needs and transparency. Question 7. Underwriting process. What is the primary purpose of medical underwriting in the life insurance application process? A. To determine the applicant's age and gender for premium calculation. B. To assess the risk of insuring an applicant based on their health status. C. To establish the financial stability of the insurance company. D. To evaluate the applicant's employment history for risk factors. Answer: B. To assess the risk of insuring an applicant based on their health status. Explanation: medical underwriting evaluates the health status of applicants to determine the risk they pose to the insurer. This process includes reviewing medical histories, health questionnaires, and potentially requiring medical examinations. An accurate risk assessment is crucial for setting appropriate premiums and ensuring the insurer can cover claims without financial strain. Options A, C, and D relate to different aspects of the application process but do not encompass the primary purpose of medical underwriting. Question 8. Premium calculation. Which of the following factors would NOT typically lead to a higher premium for a term life insurance policy? A. A history of chronic health issues. B. The applicant being a smoker. C. A shorter policy term. D. The applicant's advanced age. Correct answer: C. A shorter policy term. Explanation: premiums are influenced by risk factors such as health history, smoking status, and age. A history of chronic health issues, being a smoker, and advanced age all increase the risk profile, leading to higher premiums. However, a shorter policy term usually results in lower premiums because the insurer's risk exposure is reduced as there is less time for a claim to occur. Thus, option C is correct. Question 9. Legal and regulatory framework. Which of the following statements about the Fair Credit Reporting Act, FCRA, as it pertains to life insurance underwriting is FALSE? A. Consumers have the right to know when information from a consumer reporting agency is used against them. B. Insurers must notify consumers when an adverse action is taken based on a credit report. C. Consumers cannot dispute inaccuracies in their credit reports used by insurers. D. Insurers must obtain the consumer's consent before accessing their credit report. Answer: C. Consumers cannot dispute inaccuracies in their credit reports used by insurers. Explanation: under the FCRA, consumers have the right to dispute inaccuracies in their credit reports. Insurers are required to investigate these disputes when consumers present them. Options A, B, and D are true statements regarding the FCRA. The Act is designed to protect consumers' rights and ensure transparency in the use of credit information in the underwriting process. Question 10. Understanding life insurance as a risk management tool. Which of the following best illustrates the concept of insurable interest in term life insurance? A. A neighbor purchasing a policy on another neighbor's life. B. A business partner insuring the life of their co-owner. C. A parent taking a policy on their adult child who lives independently. D. A friend buying a policy on a friend's life without any financial interest. Answer: B. The business partner insuring the life of their kuuna. Explanation: insurable interest is a key principle in life insurance, requiring that the policyholder has a legitimate interest in the continued life of the insured. A business partner has a valid insurable interest in their kuuna's life due to the potential financial impact of that person's death on the business. In contrast, a neighbor, friend, or parent may not have a recognized insurable interest unless they can demonstrate a significant financial dependency or obligation, making option B the correct answer. Question 11. Policy provisions. Which of the following is true regarding the contestability period of a term life insurance policy? A. The insurer cannot contest a claim for any reason after 2 years. B. The insurer can contest the policy at any time if the insured commits fraud. C. During the contestability period, the insurer can investigate claims based on misstatements made in the application. D. The contestability period applies only to suicide claims. Answer: C. During the contestability period, the insurer can investigate claims based on misstatements made in the application. Explanation: the contestability period is typically the first 2 years of a policy, during which the insurer can investigate and potentially deny claims based on misstatements or omissions in the application. If a claim arises during this time, the insurer can review the application details to verify the information provided. Option A is incorrect, as the insurer can contest claims if misstatements are found. Option B is misleading, since fraud can be contested even after the contestability period if proven. Option D is incorrect, because the contestability period applies to all types of claims, not just suicide claims. Question 12. Claims process. Which of the following is typically the first step in the claims process for a term life insurance policy after the insured's death? A. The claims adjuster conducts an investigation. B. The beneficiary submits the claim form and required documents. C. The insurance company issues the death benefit payment. D. The insurance agent contacts the beneficiary. Answer: B. The beneficiary submits the claim form and required documents. Explanation: the claims process initiates with the beneficiary submitting a claim form along with required documentation such as the death certificate and the policy document. This submission starts the claims evaluation process. The insurer will then review the claim, and if all documentation is in order, they will proceed with the payment, making option B the correct answer. Options A and C occur after the claim has been submitted, and option D is not a formal step in the claims process. Question 13. Premium calculation. Which factor is NOT considered when determining the premium rates for a term life insurance policy? A. The applicant's driving record. B. The applicant's occupation. C. The applicant's family medical history. D. The applicant's current employment status. Answer: D. The applicant's current employment status. Explanation: premium rates are typically influenced by factors that directly correlate with the risk of mortality, such as health status, driving record, occupation, and family medical history. While the current employment status may provide some insight into lifestyle or income, it is not a standard factor in calculating life insurance premiums. Therefore, option D is the correct answer. Question 14. Legal and regulatory framework. Under the Florida Insurance Code, which of the following is a requirement for a life insurance agent when selling a policy? A. The agent must guarantee the future performance of the policy. B. The agent must provide a full disclosure of the policy's features and limitations. C. The agent is permitted to use misleading statements to sell the policy. D. The agent does not need to disclose commissions earned on the policy sale. Answer: B. The agent must provide a full disclosure of the policy's features and limitations. Explanation: Florida law mandates that insurance agents provide complete and truthful information regarding the policies they sell, including features, limitations, and exclusions. This ensures that consumers can make informed decisions. Option A is incorrect, because agents cannot guarantee performance. Option C is unethical and against regulatory standards, and option D violates disclosure requirements. Question 15. Problem-solving skills. Mr. Adams, a 55-year-old non-smoker, is seeking a term life insurance policy to cover his outstanding mortgage and provide for his spouse. Which of the following options should Mr. Adams consider when selecting a policy? A decreasing term policy that aligns with his mortgage balance. B. A permanent life insurance policy to provide lifelong coverage. C. A policy with a higher premium to secure a larger death benefit. D. A renewable term policy that increases in premium annually. Answer A. A decreasing term policy that aligns with his mortgage balance. Explanation: a decreasing term policy is suitable for Mr. Adams as it can be structured to decrease in value in line with his mortgage payments. This way, the death benefit corresponds to the remaining balance, ensuring his spouse is protected from mortgage obligations. Option B may provide lifelong coverage but is unnecessary for this specific need. Option C would lead to unnecessary expense, and option D may not be cost effective for someone looking for coverage that matches a decreasing liability like a mortgage. Question 16. Types of policies. What distinguishes a convertible term life insurance policy from a level term policy? A. Convertible policies offer a fixed premium for the entire term. B. Convertible policies can be converted into permanent insurance without additional underwriting. C. Level term policies provide a death benefit that decreases over time. D. Convertible policies do not require a medical examination upon conversion. Answer B. Convertible policies can be converted into permanent insurance without additional underwriting. Explanation: convertible term policies allow the insured to convert their term policy to a permanent policy without undergoing additional medical underwriting, which can be advantageous if the insured's health declines during the term. This is the key feature that distinguishes convertible policies from level term policies, which do not have this conversion option. Options A, C, and D are incorrect as they misrepresent the features of each policy type. Question 17. Underwriting process. Which of the following statements is true regarding non-medical underwriting factors? A. Non-medical factors are less important than medical history in determining insurability. B. Non-medical underwriting focuses solely on lifestyle choices such as smoking and drinking. C. Insurers may use non-medical factors to classify applicants into different risk categories. D. Non-medical factors do not influence the premium rates for term life insurance. Answer: C. Insurers may use non-medical factors to classify applicants into different risk categories. Explanation: insurers consider both medical and non-medical factors to assess risk and classify applicants. Non-medical factors, such as lifestyle choices, occupation, and hobbies, play a significant role in determining an applicant's risk profile and can influence premium rates. Therefore, option C is correct. Options A, B, and D are inaccurate representations of how non-medical factors are utilized in the underwriting process. Question 18. Practical applications. In evaluating the needs of a family with 2 young children and a mortgage, which of the following considerations is most crucial when recommending a term life insurance policy? A. The current income level of the primary earner. B. The availability of investments that could cover debts. C. The age and health status of the insured. D. The overall financial goals of the family for retirement. Answer A. The current income level of the primary earner. Explanation: when recommending a term life insurance policy, understanding the current income level of the primary earner is critical because it directly relates to the family's ability to meet living expenses and obligations, such as mortgage payments and childcare costs should the primary earner pass away. Options B and D may contribute to financial planning but do not directly address immediate financial protection needs. Option C is also important but secondary to understanding income needs. Question 19. Critical thinking abilities. When assessing a client's situation for life insurance needs, which factors should be prioritized to ensure the client is adequately protected? A. The client's preferences for policy types and premiums. B. The client's total debt obligations and dependents' financial needs. C. The client's investment portfolio and performance. D. The client's age and gender. Answer: B. The client's total debt obligations and dependents' financial needs. Explanation: a thorough assessment of the client's total debt obligations and the financial needs of their dependents is essential to ensure adequate protection. This analysis will help determine the necessary coverage amount to support the family in the event of the client's death. While the client's preferences and demographic factors, options A, C, and D, are relevant, they should be considered only after establishing the foundational financial protection requirements. Question 20. Unique aspects of Florida insurance market. Which of the following factors is not a weak consideration when selling term life insurance in Florida? A. The high population of retirees and older adults. B. The potential impact of hurricanes and natural disasters on policy pricing. C. The absence of any state-specific consumer protection laws. D. The prevalence of high-risk occupations due to the tourism industry. Answer: C. The absence of any state-specific consumer protection laws. Explanation: Florida has specific consumer protection laws that govern insurance practices, ensuring that consumers are treated fairly and transparently. Therefore, option C is incorrect. Options A, B, and D are accurate considerations when selling term life insurance in Florida, as they reflect the unique demographics and risk factors associated with the state. Question 21. Policy riders. Which of the following riders would allow a policyholder to increase their coverage amount without undergoing additional underwriting? A. Accidental death benefit rider. B. Waiver of premium rider. C. Guaranteed insurability rider. D. Term conversion rider. Answer: C. Guaranteed insurability rider. Explanation: a guaranteed insurability rider allows the policyholder to purchase additional coverage at specified times without undergoing medical underwriting, typically after significant life events such as marriage or the birth of a child. The other options do not provide this benefit. The accidental death benefit rider increases benefits under specific conditions. The waiver of premium rider allows premiums to be waived during disability, and the term conversion rider allows conversion to a permanent policy but not without underwriting. Question 22. Beneficiary designations. In Florida, which of the following is a requirement for a valid beneficiary designation on a life insurance policy? A. The beneficiary must be a family member. B. The designation must be in writing and signed by the policyholder. C. The beneficiary must be at least 18 years old. D. The designation must be notarized. Answer: B. The designation must be in writing and signed by the policyholder. Explanation: for a beneficiary designation to be valid, it must be documented in writing and signed by the policyholder. There is no requirement for the beneficiary to be a family member, and they do not need to be of a certain age to be named as a beneficiary. Notarization is not necessary for the designation to be valid, making option B the correct answer. Question 23. Underwriting practices. Which of the following statements about the underwriting process for term life insurance is true? A. Underwriting focuses exclusively on medical history. B. Underwriting decisions are based solely on the application form. C. Underwriting considers both medical and lifestyle factors. D. Underwriting can be skipped if the applicant has previous insurance coverage. Answer: C. Underwriting considers both medical and lifestyle factors. Explanation: underwriting evaluates various factors, including medical history, lifestyle choices like smoking and risky activities, occupation and family medical history. This comprehensive assessment helps insurers gauge the applicant's risk level. Options A and B are incorrect as they exclude important considerations, and option D is misleading since all applicants go through underwriting regardless of previous coverage. Question 24. Types of term policies. What is a key feature of a renewable term life insurance policy? A. The premium remains constant throughout the policy term. B. The policy can be converted to a whole life policy without additional underwriting. C. The policy can be renewed for additional terms without a medical examination. D. The death benefit decreases over time. Answer: C. The policy can be renewed for additional terms without a medical examination. Explanation: renewable term life insurance allows the policyholder to renew the policy at the end of the term without needing to undergo medical underwriting, although the premium may increase based on the insured's age at renewal. Options A and D are incorrect, as renewable term policies do not guarantee constant premiums or decreasing benefits. Option B is also incorrect, since the conversion feature is not inherent to renewable policies. Question 25. Term policy characteristics. Which of the following is a characteristic of a level term life insurance policy? A. The death benefit increases over time. B. The premium increases each year. C. The death benefit and premiums remain constant throughout the term. D. The policy has a limited term of coverage with no renewal option. Answer: C. The death benefit and premiums remain constant throughout the term. Explanation: a level term life insurance policy features a fixed death benefit and premiums that do not change throughout the policy term, providing predictable costs and coverage. Options A and B describe characteristics of other types of policies, while option D incorrectly suggests that level term policies cannot be renewed. Question 26. Conversion options. Which of the following is a common conversion option available in term life insurance policies? A. Converting to a higher death benefit policy only. B. Converting to a permanent life insurance policy. C. Converting to a new term policy with lower premiums. D. Converting to a policy with a different insurer. Answer: B. Converting to a permanent life insurance policy. Explanation. Most term life insurance policies allow conversion to a permanent life insurance policy without additional underwriting, providing a way for the insured to obtain lifelong coverage. Options A, C, and D are incorrect because they misrepresent the conversion feature or its limitations. Question 27. Policy exclusions. Which of the following is a common exclusion in term life insurance policies? A. Death due to natural causes. B. Death resulting from an accident. C. Death resulting from suicide within the contestability period. D. Death from an illness diagnosed after the policy issue date. Answer. C. Death resulting from suicide within the contestability period. Explanation. Most term life insurance policies include a suicide exclusion during the contestability period, which typically lasts for the first 2 years of the policy. If the insured commits suicide within this time frame, the insurer may deny a claim. Options A and B are covered events, while option D could be covered depending on the circumstances surrounding the diagnosis and policy terms. Question 20. Replacement of insurance. What is the primary purpose of Florida's replacement regulations for life insurance? A. To increase sales commissions for agents. B. To ensure policyholders are aware of alternative options. C. To prevent insurers from denying claims based on prior policies. D. To mandate that all agents offer term life insurance. Answer. B. To ensure policyholders are aware of alternative options. The explanation. Replacement regulations are designed to protect consumers by ensuring they are fully informed about the implications of replacing their current insurance policy with a new one. This includes understanding benefits, costs, and potential loss of coverage. Options A, C, and D do not accurately reflect the purpose of these regulations. Question 29. Insurable interest. What is the concept of insurable interest in relation to life insurance policies? A. The policyholder must have a financial stake in the life of the insured. B. The insurer must have a financial stake in the policyholder's life. C. The beneficiary must be a family member of the insured. D. The insured must be of a certain age to establish insurable interest. Answer A. The policyholder must have a financial stake in the life of the insured. Explanation. Insurable interest requires that the policyholder has a legitimate interest in the life of the insured, typically demonstrated through financial dependency or obligations. This principle prevents individuals from taking out insurance on unrelated parties. Options B, C, and D do not accurately represent the legal requirement for insurable interest. Question 30. Advertising regulations. Which of the following statements regarding advertising regulations in the Florida life insurance market is true? A. Advertisements may misrepresent policy features as long as they include disclaimers. B. All advertising must be approved by the Florida Office of Insurance Regulation before use. C. Advertisements must be truthful and not misleading regarding policy benefits and features. D. Agents are allowed to create their own advertisements without adhering to state guidelines. Answer. C. Advertisements must be truthful and not misleading regarding policy benefits and features. Explanation. Florida regulations require that all insurance advertisements are truthful and not misleading, ensuring consumers receive accurate information about policies. While agents must follow state guidelines for advertising, they do not need pre-approval for every advertisement. Options A and D misrepresent advertising standards, while option B incorrectly implies that all ads require prior approval.